So the following were included in the assets and liabilities of the Elms Nursing Home Limited on the 1st of the 1st 2009. Buildings and grounds €550,000, equipment €45,000, minibus at cost €50,000, stock in shop €3,300, stock of heating oil €1,600, creditors for supplies to nursing home €1,000, 5% investments €30,000, contract cleaning prepaid €200, clients' deposits paid in advance €4,000, authorised capital €450,000, issued capital €320,000. All fixed assets have 3 years accumulated depreciation on the 1st of the 1st 2009. The following is a receipts and payments account for the year ended 31st of the 12th 2009. So there you have all of your receipts here and then all of your payments here. The following information and instructions are to be taken into account. Number 1. Closing stocks at 31st of the 12th 2009, shop 1,500, heating oil 300. Note 2. Cleaning is done under contract payable monthly in advance and includes a payment of €400 for January 2010. Note 3. Clients' fees include fees for 2010 of €5,000. Clients' fees in arrears at 31st of the 12th 2009, €500. Note 4. The dishonoured cheque was not subsequently recovered and was written off as a bad debt. Note 5. Wages and salaries include €18,000 per annum paid to the secretary, who also runs the shop. It is estimated that 40% of this salary, €250 of the light and heat, €800 of the insurance, and €350 of the telephone is attributable to the shop. Note 6. Creditors for supplies to the nursing home at 31st of the 12th 2009 are €1,800. Note 7. Electricity due on the 31st of the 12th 2009, €320. Note 8. Depreciation to be provided as follows. Buildings 2% of cost for the full year. Equipment 15% of cost per annum. Minibus at 20% of cost per annum from date of purchase to date of sale. The minibus held on the 1st of the 1st 2009 was purchased on the 1st of the 1st 2006 and was traded in on the 1st of the 7th 2009 against a new minibus. The trade-in allowance was €7,000 against a new bus valued at €42,000. Note 9. On the 31st of the 12th 2009, the Elms Nursing Home Limited decided to revalue buildings at €900,000. Required. Part A. Calculate the company's reserves, profit and loss balance on the 1st of the 1st 2009 for 18 marks. Part B. Calculate the profit or loss from the shop for the year ended 31st of the 12th 2009 for 10 marks. Part C. Prepare the profit and loss account of Elms Nursing Home Limited for the year ended 31st of the 12th 2009 for 36 marks. Part D. Prepare the balance sheet of Elms Nursing Home Limited on the 31st of the 12th 2009 for 30 marks. And then Part E. The management of the nursing home is considering an increase of 10% in the client's fees. What advice would you give, and explain your answer? Okay, so first step, we'll do the profit and loss, which is just a case of listing out all of the assets on the 1st of the 1st and then taking away the sum of all of the liabilities then on the 1st of the 1st as well. So we can read the start of the question that has included in the assets and liabilities on the 1st of the 1st are. So you've got your buildings and grounds, your equipment, your minibus, your stock and shop, stock of heat and oil, etc, etc. Now you'll note underneath that there is a sentence highlighted in bold there. All fixed assets have 3 years accumulated depreciation on the 1st of the 1st 2009. So your fixed assets are your buildings and grounds, your equipment and your minibus. Note 8 spoke about the depreciation. So buildings 2% of cost, equipment 15% of cost, and minibus 20% of cost. So now we can find out how much the accumulated depreciation on each was on the 1st of the 1st 2009. So buildings and grounds €550,000 by 2% by 3 years, €33,000. Equipment depreciation, €45,000 by 15% by 3 years is €20,250. And then the minibus is 50,000 by 20% by 3 years, which is €30,000. Stock and shop is an asset, stock of heat and oil is an asset, creditors for supplies is a liability, investments is an asset, contract cleaning prepaid is an asset, clients' deposits paid in advance is a liability, and issued capital is a liability as well. We don't put authorised capital in because that is how much they are allowed to sell up to, but they haven't sold up to that much. They have only sold up to €320,000. So we can throw in all of our assets and liabilities there. And then what we need to do is scan through the rest of the question and see, are there any other assets or liabilities then at the start of the year anywhere else. So we have here balance at bank on the 1st of the 1st, 8250. So that is an asset because it's on the debit side, 8250. Then we go back and we see on the payment side that we have a 40,000 loan that was repaid after 8 months on the 1st of the 5th, 2009. So therefore, we did have this loan and we owed interest on the 1st of the 1st, 2009. So if you want to have a look there into your calculator, your loan and your interest is 48,100. You're told that your loan is 40,000, so therefore your interest is 8,100. If we divide that by 18 months, we're going to get €450 interest per month. Okay, so then you need to think about, well, how many months relate to before 2009? So if you look at the date that it was repaid on the 1st of the 5th, 2009. So therefore, they had it for 4 months of 2009. So therefore, they had it for 14 months before that. So if we work that out, we will have 8,100 divided by 18 multiplied by 14, and that is €6,300 there. So we tot them all up. Total assets 605,100, total liabilities 371,300. Therefore, leaving reserves on the 1st of the 1st, 2009, €233,800. So that's part A complete. Next is part B. Calculate the profit or loss from the shop for the year ended 31st of the 12th, 2009. So what we're going to do, we're going to scan down through the question and look for the word shop. So we can see stock and shop at the start of the year, 3,300. We have shop receipts, 40,000. We have shop purchases, 28,000. We have closing stock at the shop, 1,500. We have also then all of note 5, which talks about expenses that are attributable to the shop. So we'll go shop receipts first of all, 40,000. Then we have less cost of sales. We have our opening stock, 3,300, plus our purchases, 28,000, minus our closing stock, 1,500. That is equal to a cost of sales of 29,800, leaving a gross profit, 10,200. Then we less expenses. We say salary, 18,000 by 40%, which is 7,200. We have light and heat, €250. We have insurance, €800. We have telephone and broadband, €350. Altogether, that is €8,600. Therefore, giving us a profit in the shop of €1,600. Next part is part C, which says prepare the profit and loss account of Elms Nursing Home Limited for the year ended 31st of the 12th, 2009. So what it is, we're just looking for all revenues and all expenses that relate to the Elms Nursing Home for the current year, the year 2009. So the profit in the shop that we made in the last part that we worked out, that can go straight into the income. Next, you'll see I have a few items ticked off. I've ticked off the balance of the bank. Sure, that was already used in part A, and it's not an expense or revenue anyway. Shop receipts we've used. Balance carried down, that is a balance sheet item. That is going to be a bank overdraft because it's going to be brought down on the credit side. Then we have equipment, new extension, new minibus. They are all balance sheet items. And then the purchase of the shop, we've already used them as well. So moving on then, we've got clients' fees. So €340,000. Okay, and we are going to look at this here. Look for anywhere else in the question that mentions clients' fees or clients' deposits. So clients' deposits paid in advance. So we want to think about, does that relate to this year? And it does relate to this year. So therefore, we are going to add this €4,000 here because it relates to this year. Then we scan down through the question. We see in note 3, clients' fees include fees for next year, so 2010, of €5,000. That is not this year, so we are going to minus the €5,000 here. Then it says clients' fees in arrears, so clients' fees due at the end of 2009 is €500, so we plus that €500 there as well. So altogether, clients' fees €339,500. Next, we need to work out the investment income. Now, we have 30,000 investments at 5%, that is 1,500, but we have only received 1,000 of that. So therefore, in the balance sheet, we are going to have investment income due in the current assets of €500. So now we're going to move over to the payment side. So laundry, there was no notes on laundry anywhere, so that 2,000 can go straight in. The telephone, there was no notes at the top, but at the bottom we saw that some of the telephone was attributable to the shop, so we minus 350 that went into the shop there, and that is 1,250. Wages and salaries is the same thing. The only thing that affects that in this question is the wages of the secretary that was in the shop, so minus 7,200, that is €78,300 here. Then you need to look at loan interest. So the loan interest, we worked it out that 4 months of it relate to 2009. So we worked out 8,100 divided by 18 months multiplied by 4 months is 1,800 that relates to the year, into the profit and loss for the year. Then equipment, extension and minibus, they're all going in the balance sheet. Next is contract cleaning, 3,500. At the start of the year, we have contract cleaning prepaid. That does relate to this year, so we add that €200 here. Down at the bottom of the question in note 2, we have cleaning is done under contract payable monthly in advance and includes a payment of €400 for January 2010. So that is for next year. So therefore, we are minusing that 400 from there. So that is €3,300 there for contract cleaning. Next, we have light and heat, €3,100. So we're going to look everywhere for light and heat. So we have light and heat up here. We have stock of heating oil here. If you want to imagine an oil tank out the back of that nursing home, there is €1,600 worth of oil in that oil tank. So therefore, we're going to use that this year. All right, so plus 1,600 there. Then we're going to take away €300. So in note 1 there we have heating oil, stock of heating oil at the end of the year, €300. So we have not used that, we will minus that €300 here. Then we scan down through the question. Note 5, 250 of the light and heat was attributable to the shop, so we minus that 250 from here. Then in note 7, we have electricity due at the end of the year, €320. So we plus that €320. So that is €4,470 altogether. Then we have next, it's insurance. So 6,400 for insurance. So the only other note that we had was the insurance that was attributable to the shop. So 800 of the insurance was attributable to the shop. So 6,400 minus 800 is 5,600. Next we have purchases supplies. So 35,900. Up at the top we had creditors for supplies to the nursing home, 1,000. So that relates to last year, purchases that were made last year. So at the start of the year, if we owe people for purchases, we made them last year. So we minus that out of this year's accounts. And then at the end of the year, we have creditors for supplies to the nursing home, 1,800. That means we owed them from purchases made this year, so we plus that 1,800 there. So in total, we have 36,700 euro in purchases for supplies. So then we have dishonoured check fees. So we scan down through here and see what that might relate to. So if you see there, note 4, it says the dishonoured check was not subsequently recovered and was written off as a bad debt. So a bad debt then can go in as an expense. So bad debt is an expense. So we will put that in there under our expenditure. So 600 euro there. So then we have to scan down through the rest and see anything else that will go in as an expenditure. So we've done this, we've done this, we've done this, we've looked at this, we've looked at this, we've looked at this, we've looked at this. Our next thing is our depreciation. So we were told that buildings need to be depreciated at 2%. We're told equipment needs to be depreciated at 15% of cost. We're told minibus at 20% of cost per annum from date of purchase to date of sale. And then it says, on the 1st of the 7th, 2009, against a new minibus, the minibus held on the 1st of the 1st, 2009, was purchased on the 1st of the 1st, 2006, and was traded in on the 1st of the 7th, 2009, against a new minibus. The trade-in allowance was 7,000 euro against a new bus valued at 42,000 euro. So we need to look at all of those depreciations, but we also need to work out, did we make a profit or loss on the sale of the minibus? So we look at the buildings first of all. So we have 550,000 buildings up here. We add that to the extension of 200,000, that is 750,000 euro. Multiply it by 2%, that is 15,000 euro. Next, we're going to do the equipment. So the equipment, 45,000 euro plus 15,000 euro multiplied by 15%, and that is 9,000 euro. And then finally we have depreciation of the delivery van. Okay, so we need to think about this carefully because we got rid of a delivery van. Okay, so we have minibus at cost 50,000. When did we trade in that minibus? We traded in that minibus on the 1st of the 7th. So we had the 50,000 for half of the year, so 6 over 12 months. So 50,000 by 20% by half of the year, and then we add the depreciation for the second half of the year. So the van that they owned at the second half of the year was 42,000 euro. So 42,000 euro by 20% by half the year. And then we add both of them. When we add both them together, it is 9,200 euro. Next, we want to work out, did we make a profit or a loss on the sale of that delivery van? And we made a loss. So if we work out how much the accumulated depreciation was. So the cost of the minibus was 50,000 euro. Okay, we multiply it by 3.5 years. Why? Because we had it for 3.5 years. So we had it for these 3 years here. Okay, and you can just tot it up from the 1st of the 1st, 2006 until the 1st of the 7th, 2009. So we had it for 3.5 years. Multiply that by 20%, and that is 35,000 euro accumulated depreciation altogether. So 50,000, minus 35, that's 15,000 net book value, and you only got an allowance of 7. So that's a huge loss there of 8,000 euro. So we add up all of our incomes, we add up all of our expenditure, take our expenditure away from our incomes. So our net profit for the year, 167,380 euro. And then we add our reserves on the 1st of the 1st, and it is 233,800 euro. And then that is then profit and loss balance on the 31st of the 12th, 2009, 401,180 euro. So that is the profit and loss account complete then. Next, part D, we have to do the balance sheet. So the balance sheet is where we put all of the assets and liabilities at the end of the year. So all of the things that we own and all of the things that we owe. So you'd lay out your balance sheet like that, and then we'll put all the fixed assets up at the top. We'll start off with our tangible fixed assets there. So our buildings and grounds, our equipment and our minibus. We have to remember that the 3 years accumulated depreciation were charged on them. We have to also remember that we got new equipment, new extension, new minibus, and that we had our depreciation down here. We also need to remember in the last note there, if you can see it, that they decided to revalue buildings at €900,000. So we're going to have a revaluation reserve there too. So the buildings and grounds, the new cost €900,000, no depreciation, and net book value €900,000. Down in the finance buy, we create a revaluation reserve. So we had buildings and ground 550,000 and a new extension €200. So that adds up to €750,000. And if that is being revalued up to €900,000, that is a difference of €150,000. So revaluation reserve, €150,000 there. Then we add back in all of the depreciation that has ever occurred on those buildings. We had the accumulated depreciation of 33,000 here, and then 15,000 then for the year. So altogether €198,000. Then we look at the equipment. So the equipment 45,000 plus the 15,000 is 60,000 into the cost. And then into the accumulated depreciation, we have the 3 years accumulated depreciation and then the depreciation for this year, which is 9,000. So €29,250, leaving a net book value of €30,750. Then we have the vehicles. So the vehicle, we had this 50,000 minibus, we got rid of it, and then we got the 42,000. So altogether cost €42,000. Then what we have to do is the 30,000 minus the 35,000 in the sold vehicle plus the 9,200 charged for the year. So altogether that is €4,200 depreciation accumulated on that one van then for half of the year. So tot up all of your totals there. Then you have your ordinary shares, 450,000 authorised and 320,000 issued. Then you have your investments. So your 5% investments, €30,000 there. So altogether your total assets 998,550. Next, we have to think about, we just looked at the investments. What about investment income due? So remember, we worked out that our investment income for the year is 1,500, but we've only received 1,000 of it. So that means that there is €500 due to us. So €500 into our current assets. Then we have closing stocks of shop and heating oil. So 1,500 in the shop, 300 in oil. Next, we have contract cleaning prepaid, €400. Then in note 3, we have clients' fees due at the end of the year, €500. Then for liabilities, then we have our balance at bank. So that's going to be brought down on the credit side. So that is bank overdraft, €75,450. Then we have clients' fees, include fees for next year. So clients' fees prepaid is a liability. So 5,000 prepaid into less creditors here. Then note 6, we have creditors for supplies, so people that we owe money to for buying on credit this year, 1,800. And we also have electricity due, €320. Then we have to put in our profit and loss balance from part C, which is €401,180. And when we total off all of these, we should have a total net assets and capital employed of €919,180. So that is your balance sheet complete there. Part E says the management of the nursing home is considering an increase of 10% in the client's fees. What advice would you give, and explain your answer, for 6 marks. So what information should we be putting in here to service firm accounts? So what we should be looking at in general is, well, how much would the increase or decrease of fees be in euros? Would an increase or reduction in fees please the existing or potential customers? Would capital expenditure, so that's the once-off kind of long-term expenditure that will give long-term benefits. So for example, new equipment, changing rooms, attract new customers and therefore increase profits at the bar, restaurant, etc. Is there a bar, restaurant, shop profit? Did they make a profit or loss this year? What is the service firm's bank balance? What is the service firm's cash balance? Do they have any investments? Do they have a loan, or have they paid off a loan recently? Do they have any additional shares that they can sell? So you could say in your solution, a 10% increase in clients' fees would increase income by €33,950. So you're putting in the figure from the question here. There is no need to increase fees for viability or profitability purposes. The company is profitable as its return on capital employed is 18.4%, particularly in the current climate. The company is generating ample cash. It has repaid a loan of €40,000, purchased equipment €15,000, contributed €35,000 towards a new minibus, and has financed about 58% of a 200,000 extension from cash receipts. In the current climate, costs are dropping. There is increased competition and consequently charges should not be increasing.